if you wanted a low entry point, you've really got one here.
3 stocks, all under $5 with significant upside.
Price target of $9 per share, which is over 200% higher than where the stock is right now.
MarketBeat's Chris Markoch breaks down these 3 biotech beginners.
This is their entry into the obesity market, which some analysts are predicting could have a market share of over $100 billion annually.
Could these speculative plays be the boost your portfolio needs this fall? Let's dive in. Chris, so great to have you back on the show, talking about one of our favorite kinds of videos, and that is looking at 3 stocks under $5 right now. These are all biotech, so a little bit more risk involved. Before we get right into the names that we want to cover for us today, give us kind of the criteria you were looking for and maybe a caveat when you're talking about these types of biotech stocks, what investors can expect.
Right. Well, I know that a lot of traders today are looking at penny stocks because of the opportunity to make a small investment and get a big reward. Biotech is certainly one of the sectors you can look at if you're looking to do that. One thing that I would say about these stocks, though, is if investors are looking for a big payout overnight, this is probably not the place to go. But each one of the stocks that we're going to be talking about today look like they could have the potential to make larger gains in the future. And that's why it might be a good idea to start building a small position today if you believe in the story.
So these aren't the pop overnight, get 100% growth overnight, but they
Right.
are low cost of entry that over time they have the potential to do great. So keep that in mind as we go through this list. I think that's a really good way to start this. Let's get right to that first company, Chris. Which is the first biotech company you want to look at today?
Right. The first company on the list is Hoth Therapeutics. I think that's how it's pronounced. Its ticker symbol is HOTH. Now, having just said what I said, this is a stock that's up about 127% for the year. And analysts are suggesting that the stock might still have another 134% upside over the next 12 to 18 months. So this is an interesting choice in terms of investors that are looking to double that investment in the next year. Not this next week or this next month, but over the next year. So Hoth uses mRNA technology, which some investors are already familiar with, and they're doing it in 2 of the more exciting areas of biotech right now. One is oncology, and the other is weight loss. So let's look at the oncology piece of this first. So let's start by saying the company does not have any drugs that are currently in market. All of their drugs are in a pipeline right now. So that means this is a clinical stage company. It's not generating any revenue. It's obviously not profitable. Starting with that, the company's lead candidate is a preclinical, which means it's not in clinical trial yet, candidate called HT-KIT. And this is using mRNA technology to treat 3 conditions: gastrointestinal stromal tumors, systemic mastocytosis, and certain leukemias. And one of the reasons why the stock has been moving up is because in laboratory settings, which is part of their preclinical process, they found that this HT-KIT achieved over 80% knockdown of KIT expression. And KIT expression is what they call the oncogenic driver in multiple aggressive cancers. So that has some investors excited. Another reason why investors are excited is because the company has another preclinical candidate called HD-VA. And this is their entry into the obesity market, which is a growing addressable market, as we've known and talked about on the channel for a lot. HDVA is based on technology that Hoth has exclusively licensed from the U.S. Department of Veterans Affairs. And right now, again, obesity drugs is a hot market, and that's another reason why investors are probably looking at this stock right now.
Yeah, it seems like good timing on all of this, but it's still very, very early. And I think that's the
Right.
key thing, especially with biotech stocks, is to keep track of when these clinical trials turn into actually commercial products. Can you
Right.
walk us through really quick the tools on MarketBeat that help track the stage of all of these different, clinical trials that you just mentioned that have investors excited? How can you stay on top of those market
Right.
moves and really know when you might see an actual jump in the stock price?
Yeah, that's actually a really great point, Bridget. I'm glad you brought that up because MarketBeat just recently really enhanced the opportunity for investors who are interested in biotech stocks to track such things. With each stock, there's a tab for FDA events. And when you click on that, what you can see is all of the drugs. In this case, you see 4 therapeutic drugs and where they're at in the FDA approval process. So investors can see when a drug enters the clinical trial stage, when it's in stage 1, when it passes stage 1 and gets into stage 2, when it gets into stage 3, etc. So that's a good timeline for them to use to decide when or if this is going to be clinically approved, which then would start talking about when is the company going to be generating revenue and when are they going to be making profit, because that would always be a concern with these stocks, is that some of these drugs fail in the clinical trial stage.
Yeah, I was just gonna ask you just
Go
answered my
ahead.
next question, which is what is the risk involved when a company's at this stage? So I think investors should know if this
Right.
is one that sounds like a good bet to you, kind of think of it that way, right? This is really betting on the future, but it's not a sure thing.
Yeah, I always hesitate to use the word bet. I think it's you're speculating though, yes. And I think another concern that investors would have, because the whether or not it passes the FDA approval or the clinical stage trial, to me that's more of a binary thing, right? It's yes, no, and who knows? I mean, sometimes when a drug doesn't make it through the clinical trial, but the company can still try again and try to get it through again. The bigger concern, I think, sometimes for investors in biotech stocks like this is, what does the company have to do in terms of diluting shares, raising capital to get the drugs across the finish line? So that's something that investors should be paying attention to with a company like HOTH, is, make sure that the company has enough cash to get across the finish line.
That's such a great point about how to eliminate some of the risk with these companies. It's just making sure they have enough cash on hand to actually make it through the finish line. If you're looking for some other tips on how to really manage and thrive in these riskier stock plays, make sure to check out our latest free premium article. It has a list of 5 high risk, high reward stocks that all have serious momentum. You can scan the QR code now or click the link in the description to get that list of stocks for free right now on marketbeat.com. And you can also sign up for our free text alerts for all of these high risk plays by texting YouTube to 68285 and add these names or really any other stocks you want an alert for right to your phone. All right, Chris, let's
Right.
get to that second biotech stock that's also well under $5 for investors looking for some more speculative plays.
Right. Well, if you wanted a low entry point, you've really got one here. This is a Silo Pharma. Ticker symbol is SILO. And this stock today is trading for just 68 cents a share. So it's literally a penny stock. Now, the story here, though, this stock is down about 24% year to date. But the story with Silo is, remember when we were just talking about Hoth, we were saying they've got an obesity drug that's in the preclinical stage. Silo has announced that they're partnering with Hoth on that drug. They're in a 50-50 joint venture with the company to develop that drug candidate. If that drug is successful, Silo automatically gets access to that growing obesity treatment market, which some analysts are predicting could have a market share of over $100 billion annually, which means there are more than just Novo Nordisk and Eli Lilly as companies that have an opportunity in the space.
Yeah, there's a lot of opportunity in this space, but
Yeah,
with more and more companies working to develop their own versions of these different obesity treatments, I think the question I have is competition and also the potential for a company of this size, that's this small,
right.
for a buyout and what that could mean for investors who might be looking to get in early right now. Is it possible that there's a merger down the road or they get taken over by someone else? How does that impact investors?
Yeah, I didn't now. we'll start with just saying I didn't see any evidence right now that silos in play as far as being acquired, but that is a very real option. Frequently, you'll see bigger biotechnology, biopharma companies look to acquire some of these smaller companies to gain access to their technology, which also allows those bigger companies to grow and provide value for their shareholders. That's always a possibility here.
Is it usually a good thing for investors who are already in a stock that might get acquired?
Usually, yeah, because usually there's some premium that they'll get. Now, a lot of investors, once that happens, they may get the premium bump from the acquisition news and they may decide to sell out of the stock. But generally speaking, it's good for investors if that happens.
Does this company have any other drugs or any other research in the pipeline that could also benefit them, or is it really just this one area for this company?
Yeah, I'm glad you brought that up. So with Silo, it's not so much the fact that there's another drug. They do have other candidates in their pipeline. I do want to say that. One of the things that may be exciting investors, because this stock's up, I said it's down about 24% for the year, but it's been up about 14% in the last 3 months and about 10% in the last month. And one of the reasons for that outside of this partnership with Hoth may be that the fact of they've recently announced a cryptocurrency treasury strategy. So what the company's doing is they're making investments in Bitcoin, Ethereum, and Solana, and they're utilizing staking to generate yield for the company while still focusing on their capital preservation. So it's kind of an interesting um, strategy that they're using where they're using the growth in cryptocurrency right now to help fund some of those operations, which again goes back to that idea of saying these are young companies that are trying to get their drugs across the finish line. It's an interesting strategy, and it may be appealing to some investors in this space.
Yeah, I think for some investors that would be appealing. For others, they hear
Yes.
cryptocurrency investing and they're like, "Nope, I'm out. I'm not interested anymore." So
Yep.
let us know in the comments which side you fall into. Is that an exciting, innovative way to look at funding their research, or are you kind of
Yep.
turned off by that too? I'd love to hear what your thoughts are on that one. Let's get on to your final company on your list of three biotech stocks under $5 right now.
Yeah. So the next one is Anixa Biosciences. The ticker symbol is ANIX. Um, so once again, we're talking about a company that's focusing on oncology, which is one of the hottest sectors in biotechnology right now. And the company is slightly further along on its development path than the first two companies we've talked about. That's reflected slightly in the stock price. This is a company that's it's trading at about $2.96 per share right now. It's up about 26% year to date. But here's the exciting part, Bridget. Analysts give the stock a price target of $9 per share, which is over 200% higher than where the stock is right now. And the reason for that is because they have a drug candidate that's in phase 1 trials right now. So it's not preclinical, it's actually in clinical trials. And it uses the CART immunotherapy to treat ovarian cancer. So the idea is they want to activate a patient's immune cells, the T cells, to kill the sick or the damaged cells. And then another candidate that they have that's in active trials is using vaccine technology to help the body generate tumor specific antigens. So the company has a partnership with the Moffitt Cancer Center, the Cleveland Clinic, the U.S. Department of Defense for one or more of their drug candidates. So that also gives investors confidence that the company is going to have the financial resources to get their drugs across the line.
Yeah, those are some big names that you
Yeah,
mentioned, some good partnerships there, but also that upside is probably what has piqued a lot of interest from investors right now. I know we
exactly.
started this by saying don't expect a huge, huge upside too quickly. So is
Correct.
this really something that is going to take that full year to see upside?
Well, so I guess I would answer this way. I think investors would want to see these stocks kind of grind up slowly and move up based on positive news based on the results of their drugs. Having said that, you really don't know what's going to happen to the market in the next 3 months. And there's a really good possibility right now that you could see the market really take off towards the end of the year. And that could be a lift for some of these stocks. It's also an area where I have to issue a little bit of caution for traders, because if you're a speculative investor that's looking to buy these stocks for the long term, a sharp move higher right now might be a little bit of a head fake. But again, if you're into the biotech space, if you really look at these companies, look at their drug technology, and you believe in the possibility of the drug long term, this could still be an opportunity to take a really small part of your portfolio and buy a lot of shares at a really cheap price, and then you'll be set up for when these stocks make that move higher.
Yeah, it's the hope for everyone is a small initial investment that
Right.
gets you some good returns. But like you said, small portion of your
Yeah.
investment. I think
Yes.
that's the key when talking about biotechs. I feel like if you're an investor who doesn't like biotechs, you probably didn't make it this far into the video. But for those who might still be on the fence about whether biotechs are right for them, I know one thing we hear from viewers often is biotechs have burnt them before.
Right.
There's too much volatility in the field. What are your thoughts for just overall suggestions on things to keep in mind on the risk that comes with biotechs?
Yeah. To me, the risk, we've talked about this, Bridget. I mean, we talked about this earlier. I mean, the primary risk is the fact that the drugs won't make it through the clinical trial stage. They'll fail the clinical trial stage. What a lot of investors seem to be saying to you in terms of saying they've gotten burnt by them is stocks like this that are penny stocks are a playground for traders, and traders can come in, and traders will oftentimes not only take a long position, but they'll take short positions. And so they'll try to short the stock when it pops up. And that creates a lot of volatility in these stocks. That's why a lot of investors, you really have to have conviction in what the drug is going to do and have conviction that it can get through the clinical trial stage. And then the biggest thing is you've got to be able to have the patience to hold on to it for that long time, because sometimes these clinical trial stages can take 2, 3, 4 years for it to get through the process. So if you're making an investment in some of these stocks today, you might not see the real big payout for 5 or more years. And that's just longer than a lot of investors really want to wait.
Some really good points to consider. And again, that is a long process through
It
all of
is.
these clinical trials. You can keep track of all of it again on MarketBeat. I just want to show off some of those tools again because they're so great. We have a really awesome development team here who's
We
built
do.
this website to make it so easy for investors to just go and keep track of stocks like this. So if you are someone who's in biotech all the time, this is a free resource for you. And I so encourage you to check it out to keep track of these stocks along their process of these clinical trials and when you might see the biggest swings in the stock. Chris, thank you again for the list and some new names for investors to consider if you're looking for those speculative plays. Let us know your thoughts in the comments. Are there other biotech companies that you're looking at right now as those speculative buys out there too? We'd love to hear any suggestions you have as well. Thanks for watching, everyone, and as always, happy investing.